Welcome to the Sazmining podcast. At Sazmining, we are bringing you into conversations with today's industry leaders in blockchain and cryptocurrency. Our goal with this podcast is to improve the understanding and adoption of blockchain and cryptocurrency by giving you an insider's look at what's being built and informed predictions on what the future holds. Today's episode is sponsored by BlockFi and Cogent Law Group. Our listeners can visit blockfi.com/sazmining for an exclusive offer for cryptocurrency management. And check out Cogent Law Group for all your legal needs. Today's guest is a graduate of Chapman University, and his goal is not just to build a company, he wants to create a movement. As a repeat founder, he is now taking his progressive approach to tackle environmental degradation, political instability, and technological transformation. As the Chief Growth Officer at Frontier Mining, he is working to power the Internet of Trust by enabling people to participate in the blockchain revolution. So with all that said, I'd like to welcome our guest, Kyle, to the podcast.
Thanks so much for having me, man. It's a real pleasure. Even though we have to do this across the country, man, I'm so glad we're making it happen.
Yeah, same here. Why don't we start by having you tell us a little bit more about your consulting background and how that's played a role in your journey into cryptocurrency mining?
Yeah, absolutely. It's interesting. You would never think that, my previous background in just working with, early stage startups that were basically ideas on napkins would ever lead me to this super niche space of cryptocurrency mining. But as you know, life is an incredibly circuitous journey, and I'm super grateful that I ended up landing where I'm at now. But my journey really began as an entrepreneur when I was around 12, 13 years old. And I remember as a kid, literally just taking like an 8.5 by 11 sheet of paper, putting everything that I possibly could on it, taking Microsoft like 2000 or Microsoft Office 2003, taking my mom's computer, putting absolutely everything that I could in this sheet of paper, printing out 1,000 of these copies, burning all my mom's printer ink, and going and putting every one of these sheets into my local neighborhood. And before I knew it, after kind of putting out the fact that I could wash windows, mow lawns, and fix computers, I started to be able to be a little bit self-sustainable. And, I was kind of generating my own income. And that's really where I kicked off this spirit of wanting to be independent, innovative ultimately, because I realized that, the great thing about living in the U.S. is that we're really afforded a lot of unique opportunities, particularly as entrepreneurs. So that's where it all began, but it's really started to kick off for me more formally when I was in college. So as you mentioned, I went to Chapman University. I'm a Los Angeles native, but I went to university just about an hour south of LA. And, I had the opportunity while I was there to really get connected with the culture that I hadn't been super familiar with before, which was this whole Silicon Valley tech movement. Being in LA, we kind of have what we call Silicon Beach, which is sort of the little brother to Silicon Valley. But even having that, we're able to still get a real strong taste of where the world is moving. And so for me, I dabbled in different opportunities that came across my plate, whether it was building an app or whether it was launching a clothing brand or launching a concert production company. I mean, I did the whole serial entrepreneur thing, even though I was 17, 18, 19 years old. But the interesting thing, Will, that I picked up throughout that whole process, man, and I know this as a fellow entrepreneur, starting a business is really hard, right? And I don't think that message, even though it seems so obvious, is really that well communicated to young entrepreneurs. And I think that's why a lot of them have that pie in the sky mentality of, okay, well, I see someone else doing it. I see that Mark Zuckerberg was a billionaire by the time he was 25. That means I can probably do it. And so because of that, they get these really lofty goals and ideas, and they end up trying to aggressively chase them. And what I wanted to do was help bring people back down to reality, but more importantly, build a strong system and structure for what it means to take an idea from a napkin to a business. And so when I was in college, I decided to launch a company with a couple of my buddies called CEO. And CEO still runs today. You can check it out at sieo.io. It's a fantastic organization. And basically, it was all centered around the concept of helping startups start up. That was our mentality. The ironic part about it is that we were a startup. So we were a startup helping startups start up. And a lot of people called us out and were like, how do you guys know how to start businesses if you're still starting your own? And it's true, but we cared deeply and we were super passionate. And sometimes in America, all you need is passion and grit. It'll get you to where you need to be. And so ultimately, we ran that company. And over the course of the following years, as it started to transform and shape itself, we ended up kind of moving into that world of consulting, which you had brought up earlier, where we would work one-to-one with entrepreneurs, founders, et cetera, and basically help them take whatever business stage they were in and help to scale that up. So if it was an idea on a napkin, like I've mentioned, we would take it from there and really get it to a point where it was revenue generating. If it was already revenue generating, we'd figure out how we could 5, 10, 15 exit, et cetera. And then we'd actually implement the strategies in place. But the interesting thing is, how do you draw the line from consulting all the way to mining? Because it's a pretty big leap to go from what I was doing to what I am doing. And the story of that ultimately began with the bull run of back in 2016 and 2017. Just like many of us who got into this industry, we got into it because it was very financially friendly to us at one point in our lives. Unfortunately, it hasn't been over the course of the last couple of years, but at the time, it was super exciting. It was a super new, it was kind of this new niche opportunity to make money, and it was almost a get-rich-quick scheme. So I was like, this is probably too good to be true, but I've always had a passion for emerging tech, so I'm like, okay, let's go take a look at it. Watched a documentary on Ethereum on Netflix, and before I knew it, I became pretty captivated by the space. So was a retail investor, got Ethereum when it was like $15 and, saw a lot of success. But what was interesting is I didn't take the step from being just a retail player to an actual professional institutional player until I had a couple clients come to me when I was running my consulting business who said, hey, we've got this idea to build this thing on blockchain. And as it turned out, Will, wasn't much of an idea. It was more of, again, the pie in the sky mentality. I see these initial coin offerings going off for hundreds of millions of dollars with basically no real product or service behind it. And I want that money. It was a super weird time, man. It was a super weird time. But, my company was really well skilled with, areas like graphic design, branding, marketing, et cetera. So they're like, hey, can we build, do you want us to build your website for this crazy ICO project? They're like, yeah, they just ate it right up. So ultimately, that's how I got into the space professionally, was working with early stage ICOs and kind of helping them get their businesses off the ground. Through that process, eventually learned about the technologies behind blockchain. And as you can see, now we're getting a little bit closer to the world of mining. So that's how I got into the cryptocurrency space. Probably an opportunity to pause there for a sec. Will, do you want me to take the leap into how I got into mining too? Because that's its own crazy path.
Yeah, definitely. I mean, one thing I would like to say is that I can definitely sense the passion and sense that entrepreneurial spirit within you and all the companies that you started. So really excited to hear how you made that jump into mining.
Yeah, well, like I said, man, being an entrepreneur in the U.S., there's one thing that will always differentiate you, and it's basically how hard you hustle, right, at the end of the day. Because you can have a product that looks just like the person next to you, but if you work harder and you care about it more, you're going to get a lot farther. Right. And that's really been the story of my existence too. Will happily admit, I'm not the most innovative person on the planet, and I don't have the greatest ideas, but I will outwork you. And that's sort of the mentality that I try to stress upon our team and all the people that I work with in my current role and in previous roles is just bust your butt and you will get to where you want to be in life. So all that being said, how to make the leap to mining? Well, I was working with these early stage ICO companies and kind of getting a feel for the industry, starting to understand the technologies behind blockchain, starting to get a real feel for what it meant to run a cryptocurrency based application. I knew that the internet ran on servers. So I'm like, well, the blockchain space must have something that's powering it because it's not just, some concept in the clouds. This is a real thing. And the timing was actually super serendipitous. So I'd actually just gotten back from doing a little bit of a speaking tour over in Southeast Asia. And one of my buddies from when I was in high school saw one of the videos of me speaking. And he hit me up and he said, hey, man, what are you up to? And I'm like, well, I'm doing this thing where I'm kind of learning about, kind of working with various crypto companies and doing this consulting thing. And he's like, dude, I hate being in corporate right now. I want to come see what you're up to. This is my actual now current co-founder of Frontier, Arlen, who came and basically said, I want to join you in your venture. But Arlen didn't last long because Arlen's a super sharp hardware engineering type. And so when he came down and started working with our team at CO, at our consulting firm, he was pretty obsessed with crypto at the time too, during this bull run. And so he said to us, hey, in that incubator that you guys are working out of, do you pay for power at all? And I'm like, actually, the whole thing's free. And he's like, okay, I have an idea. So he brought down, basically a couple PVC pipes and graphics cards and shoved them into one of our closets. And that is where the journey in crypto mining began. He had basically built this kind of makeshift rig, and we were running it out of our office, and it was making an absurd amount of money. Because at the time, GPU mining, and we'll speak more to what that specifically is, but at the time, mining as a whole was a very profitable venture. And so even running something as simple as a couple graphics card on literally PVC pipes was actually enough to generate, real cash. And so ultimately, we started running this thing down in our incubator. Arlen started to realize, hey, this is actually a real revenue generator. And so what he started to do is he kind of just started to feel out his own network and see maybe someone else is interested in this. And so people got word of it eventually, and he actually started selling these machines. And then his father owns a large data center company based out of Los Angeles. And so he needed a place to put the machines, started putting it there. as he's one of my hires, I know that he's like never paying attention to what we're doing at CO. And so I'm like, dude, what are you working on, man? And then one day he came and basically told me what his vision was in the mining space of building these GPU machines and kind of helping to create custom portfolios for institutional investors and, create tax strategies and whatnot, using mining as the vehicle. And so I said, this sounds really interesting. And so after he plugged me with that initial idea, it was probably about 4 months later that we formally decided to partner up together and form Frontier. And the journey kind of launched from there. So I'll pause. I don't want to go too deep into Frontier because I could keep talking forever, but that was how I made the leap into mining.
Yeah. Wow. That's a very interesting journey. So you guys actually started with GPU mining. Just to lay the foundation there, can you explain what GPU mining actually is and how and maybe start with what a GPU is?
Yeah, absolutely. I mean, the crazy thing is, Will, this space is so freaking complex, man. And I'm not one of those people where I'm not the most technical person in the room at all. Like, my partner is definitely the most technical person in the room, even though he would say he's not. He definitely is. Me, on the other hand, like I came into this industry as basically like a business guy. Like, I'm a business, marketing, sales guy, an entrepreneur, like through and throughout, but I'm not, some ultra technical person. And so I didn't even know what GPUs were when I initially came in. I just knew that they were used for gaming. And that's how most people know GPUs as. Like, if you're a hardcore, like a gamer or something like that, you game a lot in your computer, you probably have one or two of these graphics cards shoved into a box under your desk that's powering most of those, like, crazy video games like Call of Duty and all that, where you can gnarly graphics.
They got very expensive because of the miners.
There was a period of time where like NVIDIA was a great stock to invest in, particularly because of mining. The ironic thing is that NVIDIA then doubled down on their inventory in 2018, expecting the mining boom just to lift off, and then the market crashed. And so NVIDIA's stock crashed too. So if you're an investor in NVIDIA back in 2018, I'm sorry, I was with you though then. 2019 and 2020 have been more friendly to us because they've kind of tempered their expectations in terms of what they're going to sell. But all that being said, back to your question. So GPU is very simple. It's called a graphics processing unit. Basically, it's a specialized type of computer chip that allows you to perform tasks at very high speeds. I mean, that's the easiest way to break it down. What do most GPU cards get used for is a question I hear all the time. And the majority of people use GPU cards for gaming, like I mentioned, film rendering, and then now they're also moving into the realm of like artificial intelligence, big data processing. It's essentially, you could consider it to be like the backbone of many supercomputers is a graphics processing unit card. The future supercomputers, like the quantum computers, won't be relying on those, but a lot of the computers of today's world that are, processing the majority of our data are using GPU-based cards. In fact, let's say, for example, that you want to, start Sazmining.com, for example. I would guess that you have a host like a GoDaddy or something like that. That host is likely hosting your website on a GPU server somewhere around the world. And so GPU cards had a lot of application prior to cryptocurrency mining. But what people realized was that the unique thing about these GPU cards is that they are very flexible in terms of the applications that they can be used for. So not only are they super powerful at being used for things like film rendering, artificial intelligence processing, big data processing, gaming, et cetera, but they can also be applied for mining. And so that's when people started to make the leap of saying, okay, I see that there's this card. It can process data at a really high speed. I know that cryptocurrency mining is effectively just processing data at a really high speed. The two worlds met together, and before you knew it, people were transferring their GPU cards over to cryptocurrency mining.
Yeah, and that was the core of what you guys were doing in those early days when you were setting up these GPU rigs and you were processing very large amounts of data and earning digital assets as compensation.
Yeah, exactly. So, our experience really began with, we literally had a couple GPU cards laying around and we wanted to shove them into a box and see what would happen. And when I say box, I mean like a computer box or a server box. And that's where it got started. And then, of course, if you look at what GPU mining has become now, and for your audience, if you're not super familiar with it, you can literally just type in GPU cryptocurrency mining on Google and you'll see what it's become. It's now become, like a formal server chassis. So it's, basically a 4x8 box with a bunch of cards in it, a couple of fans, and that's what mining essentially is. It's just putting as much computational power towards the blockchain as possible in the hopes that by doing that, blockchain will come back to you and reward you for basically exchanging your computational power.
That's one form of mining. Another one that whenever we're talking about Bitcoin type of mining is using a different type of hardware called ASICs.
Yeah.
Is that something that you guys are actively doing today, or are you guys still focused on GPU mining?
That's a great question, man. So, what's interesting is that so we've been around with Frontier for about 3 years now. When we first started the company, we were predominantly focused on GPU mining. In fact, the first year-ish of the business was basically all GPU mining based. But what we realized was that, and this is a fellow great entrepreneur, man, like when the market doesn't receive your product well, you have to pivot. And for us, the market did not receive our product well. Reason why? Well, the market had crashed. And GPU mining is not known as being the most profitable form of mining. So when the market crashed, you have to imagine the GPUs were the first ones to basically turn off. And so that forced us into a position where we had to figure out, okay, well, we really still want to be in this industry, but how can we survive? And that's when we started to dig deeper into what you just mentioned, which is the other type of mining called ASIC mining. And for your audience, just so they understand, GPU mining and ASIC mining it sounds complex and wordy, but really all it is at its core is that GPU mining uses a special type of graphics card, which can again be used for things like film rendering, AI, etc. ASIC mining uses a special type of chip called an application-specific integrated circuit. And what that essentially means is that it's application-specific, unlike a GPU. So when you're using an ASIC, you can basically only do one task with that ASIC. So a GPU, again, can be flexible across multiple applications. An ASIC, when it's designed by a manufacturer, can only do one thing over and over and over again. So in other words, the ASICs are more consolidated with their power. In the simplest way of describing it. An ASIC can mine one cryptocurrency very, very, very well. A GPU can mine hundreds of cryptocurrencies kind of well. And you can see as a miner why it would be strategic to do one or both. Because with GPUs, you have the ability to, kind of change around your coin and go towards what's profitable. And a lot of GPU miners, what they'll do is they'll actually do that specifically. They'll do what's called profit switching. So they'll look at, let's say there's 100 coins to mine, and, one is like we'll call coin A profitable one day and coin B profitable the next day and coin C profitable the day after that. Every single day, the GPU miner is shifting over to the most profitable coin automatically. ASICs, on the other hand, are much more specific. So they do have the ability to mine a few coins, but generally they mine one coin. And the most popular coins that can be mined by ASICs are Bitcoin, Ethereum, Litecoin, and Zcash. So there's a lot of individuals that now use ASICs predominantly. I'd say our industry, at this point, I mean, this is just a speculation. This is just a guess. I would say 85 to 90% of the cryptocurrency mining industry is ASIC-based. It's cheaper. It's more efficient. You make more money, simply put. GPU mining will probably will continue for reasons that, ASIC, there are certain coins that are ASIC resistant. So in other words, they do not allow for ASIC mining. But the reality is that what will end up happening with most of these GPU cards is that they're going to get transferred to other applications. And as the demand for AI, film rendering, cloud gaming, all that stuff increases, there'll be people like Amazon and Google and Facebook buying those GPU cards and miners sticking with ASICs most likely.
Yeah. It's funny to hear how you made that progression and made that pivot, because that's something that we actually did as well in those early stages. GPUs, from a business decision, they sound very great because you have that flexibility to go to other types of algorithms and process data for more than one type of algorithm. But as soon as you get to a point where it's just not profitable to mine any of those algorithms, then you really start evaluating, okay, it might make sense to just go and focus on this particular vision of Bitcoin that we believe in, where the return on investment is much, much better than you would get on any other type of GPU.
Just a numbers game at the end of the day. Like a lot of this industry is as cool as it sounds and as fun as it sounds, as captivating as it sounds in terms of all the technological applications and backbones of blockchain that are required by mining. At the end of the day, like, it's a numbers game. And if your miner is not making you money and it's not profitable and it's not ROI in a reasonable amount of time, you're just not going to do it. It's not a strategic investment. And so that's why most of our industry has shifted towards ASICs. I mean, with the GPU, you're talking about like, a 36 plus month ROI period. It just doesn't make sense, especially in an ever changing market with adjusting difficulty and adjusting Bitcoin price. And we can speak more to difficulty later if that's a little bit, wordy for your audience. But, the reality is that, like, you have to look at it from a financial perspective. And it's pretty obvious when you look at the numbers that ASIC mining is the way to go. Yeah.
Well, I think that's a great segue into diving into difficulty and
sure.
And how that relates to miners and how that relates to the hash rate on these different networks. If you want to just go about explaining that in the way that you see best.
Yeah, I mean, difficult. Again, I think the problem with crypto, honestly, Will, and you and I have both seen this as guys who've been in this industry for a long time, is it seems like everybody wants to make it seem more complex than what it actually is. And I
There's a
remember
lot
the
of terms.
there's a lot of unnecessary, like, it's like being a lawyer. Like, they in the world of lawyer speak, they call it legalese. In the world of crypto, there's like a cryptoese as well, and there's no need for it, honestly, because it only makes the space seem more complicated and less likely to be adopted by institutional or retail players. Because if you don't get an investment, you're not going to want to invest in it. But the bottom line is that we want more people involved in Bitcoin. We want more people involved in mining. This benefits our industry. This benefits the future of decentralization. This benefits the future of democratization of how money is transferred and spent. And so we really want people to get involved. So for us here at Frontier, we're big on trying to create clear, simple ways of understanding how this industry works. And so that leads right into how I like to describe difficulty. So difficulty is a super easy concept, really, at its core. I always think about it like this. I like to think about it in terms of, like, if there is a pie, like, let's call it an apple pie sitting in the middle of a desert, right? And there's a lot, this is such a silly way of describing it, but there's a lot of hungry rabbits, let's put it that way, right? And the rabbits really want the pie, right? Ultimately, what will end up happening is you have 100 rabbits all going towards the pie. Who's going to get there first? It's going to be the fastest, strongest rabbit. And that rabbit that gets there first is going to take the biggest bite of the pie. That rabbit might even get 2 bites of the pie or 3 bites of the pie. And then the next rabbit will come behind him and he'll take a bite, and then the next rabbit, and before you know it, like, the slowest rabbit at the very end may get there and may get a bite. But the likelihood is that rabbit will get a very, very small bite. He'll get a crumb, right? In the world of Bitcoin, it is almost identical to that. The only difference is that the rabbits are computers and the pie is a Bitcoin. So the way that difficulty basically works is it's a concept in mining of basically network competition. So these rabbits are all competing against each other to go get that pie. These computer servers are all competing each other to go get the biggest slice of Bitcoin, basically. And so the idea is that as an individual investing in this space, you basically want to continually upgrade your rabbit or your computer hardware to be able to have the fastest, most efficient computer so that you can get as much of that Bitcoin as possible as quickly as possible. That's the essence of difficulty, but the reason that it's such an important thing to note in this space is because as more rabbits or as more computers are chasing that same Bitcoin or that same pie or that same Bitcoin, it becomes more and more difficult to get large chunks of it. And so what you hope is that the pie, or the Bitcoin in this case, grows in size. So in other words, you hope that the price of Bitcoin increases so that there's basically more to go around. Because the idea is that if you now have 200 rabbits all going after that pie, you need that pie to double in size for everyone to still get their fair share. If the pie stays at its current size and there's 200 rabbits, then everybody gets less. And now basically those rabbits have a smaller and less exciting incentive to go get that pie. And so in the mining space, what you really want to happen is, number one, as an investor, you want to make sure you have the latest and greatest, fastest computer out there. And then secondarily, you want to make sure that as there are changes in difficulty, so as it gets harder to mine a Bitcoin, you want the price of Bitcoin to proportionally increase so that ultimately the end result is that there's a negligible change in profitability. That's the ultimate goal as a miner.
Yeah, that's a really interesting analogy. I have not heard that one yet, but I might have to take that. I might have to start using that.
It's all yours, man.
Yeah, and that is true. As more and more rabbits, in this case, more and more miners come into that competition, you need the price of Bitcoin to be able to support that, and the analogy, the pie, to be big enough so you don't have any rabbits starving to death in that scenario.
Because ultimately the rabbits die, right? And that's what happens in the world of mining too. Like, eventually the computers that are not efficient enough or not fast enough, they just become unprofitable and you have to turn them off. And so they effectively are dead, and they will literally at some point they'll become doorstops. I mean, you can go online now and you can buy a miner from 3 years ago for like $10. I mean, they're not worth anything anymore, except maybe a doorstop, or if you go somewhere. I think the other crucial part to understand about mining is that there are multiple variables that go into being able to have a successful rabbit or a successful miner. Of course, the price of Bitcoin, which we talked about, and the level of difficulty is super important. But the last piece that people don't seem to always think about when they're entering this industry is that the computers don't just run for free. They need power and they need internet and they need management. And that's what we do here at Frontier. So the goal with Frontier is to provide low cost power, internet, and management, along with a suite of other really captivating services that people can feel free to check out on our website. Shameless plug, Will. But that being said, the idea really here is that you want to make sure that you drive your costs down as much as possible. Because the thing is, in the analogy of the rabbit, once you go get the pie, think of it like this, like you go get the pie, well, for those rabbits, I haven't gone this far at the analogy before, but the idea is with these rabbits, like after let's look at it like this. After they've sprinted towards that pie, they're tired, right? They're hungry. So they want to eat the pie, which means the amount that's left over is not that significant. So in other words, to power the rabbits, to basically fuel the rabbits to be able to go get more of the Bitcoin, you have to give them some of the Bitcoin. And so the analogy almost plays out perfectly in terms of mining, because what ends up happening is after the computers go and earn the Bitcoin from mining, for example, they then have to pay us to keep the miner powered and online and fueled, so to speak. Right? So that's the other factor that's really crucial, is then you have to make sure that not only does difficulty in the price of Bitcoin play really nicely with my mining operation, but also is my operational cost to actually run the miner playing friendly enough so that my net take home is profitable to a point where I can, ROI my initial capital investment and, however long I feel comfortable being exposed, which for most people in our industry is about 12 to 18 months, where you feel comfortable having your capital exposed, and then you want to make sure that you ROI your hardware cost.
Yeah, and you touched on a very important point within that whole analogy, but particularly on the efficiency of being able to run your operation. So there are many miners that the way that I tend to look at it is you have a spectrum of where the miners all fall along the spectrum in terms of costs. And so the price of Bitcoin is going, let's say today it's at $11,000. There's a certain amount of miners who are producing Bitcoin at $11,000, $10,000, $9,000, $8,000, and down and down and down until you have the most efficient miners who might be able to produce Bitcoin at around like somewhere in the ballpark of $3,000 to $4,000, right?
Yeah.
And consistently taking in all the costs, taking in the management, the overhead, the electricity, everything. And as soon as the price drops, that's really when you want to make sure that, in your analogy, you're the fastest rabbit, or you're the most efficient miner, and you're producing the Bitcoin at the lowest cost. Because then as many other miners start to fall off and go out of business, then you're still there getting a larger piece of the pie, because there are less rabbits that are going for that piece. And so I think that it's really important that when people decide to go into mining, they either understand all the different variables and are able to run a very efficient ship themselves to be able to mine profitably, or they go and they find a company that has already figured it out and is within the lowest cost tier of being able to operate these machines and produce Bitcoin. And I think that that's a good segue into this concept of hosting. So hosting is when you're not necessarily taking over the entire life cycle of producing that Bitcoin. You're not purchasing and building up the facility and purchasing the miners that are going into that facility, but you're actually just taking on one part of that process. So with that, how about I pass it off to you and you talk a little bit more about your hosting service and how exactly hosting ties into cryptocurrency mining.
Yeah, so I think there's a couple key areas of the cryptocurrency mining supply chain that are important for anybody in this space to understand, but particularly people that are new to the space to get it. So first and foremost, you got to have money to play. That's probably the biggest one for people to understand. Like the industry is getting to a point where there's so much activity in it now that if you have less than $50K to spend, it might not be worth it. Because the reality is, like, you just don't have that much swinging power, so to speak, when you're going and buying hardware or you're going and negotiating with companies like ours. Like, if you want to get your costs down, which is your end goal, because you want to limit your exposure in the space, you got to have some buying power. So that's probably the first piece to understand. Is like, you have to be decently financed to enter into mining. Otherwise, wait until you have the money, save up for a bit, or go and raise capital or get some financing or get a loan or something like that. More options like that are cropping up now with the increase in acceptance in cryptocurrency as a whole. So, getting a personal loan from a bank and using it for mining is actually more acceptable now than it was when we first started. That's for sure. And that's only a 2-year window. A 3-year window. So I can't even imagine where the industry is in 3 years from now. That being said, the second most important layer, of course, is your hardware purchase, right? You want to drive costs down. You want to get a really strategic purchase, like you had just mentioned, Will, in terms of making sure you have a highly efficient machine. You want to basically have a machine that consumes the least amount of power, because that's your number one expense, and has the highest output, which is called hash rate in our industry. So it's your processing power of your machine is called hash rate, and that is effectively the output of the machine. So again, first 2 layers are financing and then sourcing, right? You want to make ultimately very strategic decisions on both those fronts. And then the last and crucial piece is, now that you've got the computer, you got to get it online. And that is where companies like Frontier step in. And that's really where a new industry has cropped up in the world of mining, which is the co-location space or the data center space. Data centers have obviously existed for a long time, so we're not reinventing the wheel over here, but we are making the wheel run a heck of a lot more efficient. Because the reality is the data center industry is known as being very antiquated and clunky. And the reality is that an antiquated and clunky industry usually means higher costs for the end client, because they're just not running super lean like the new, technology companies of today do. The downside of this for the average cryptocurrency miner is that you can't really call the data center around the corner from you, because they're going to charge you up the wazoo, and you're not going to have a profitable mining operation. So because of that, that basically left a gap in the market over the course of the last, let's say, 5-6 years. And that's a gap that we are attempting to fill with Frontier, which is where you can provide a similar level of service to what a traditional data center would provide, but do it at a cost that is 80% less, in some cases even more, which is a tough problem to solve. But, shout out to the ingenuity of Americans. We've managed to figure it out over the course of our existence, how to get things cheaper ultimately, and how to be lean as entrepreneurs. And that's really what the hosting industry and our industry has had to do to be able to stay viable, particularly in an ever-changing market. So I'll spin it back for a second and explain exactly what we do so that your audience kind of gets a full picture here. Again, when you buy one of these machines, there's 3 key components to making sure that they actually work. Number 1, power, obviously. Number 2, internet. That's probably an obvious one too. Number 3, management. A little bit less obvious. The reason I say it's a little bit less obvious is because the computer hardware that we're used to using is our phone, our laptop, etc. They don't really require that much maintenance. Maybe every once in a while you'll take your computer into Apple or Microsoft and you'll have them, fix a cracked screen, or you get a key come loose in your keyboard. But for the most part, they run for multiple years without major issues. Miners are a different animal. Main reason why they're different is because effectively what you're trying to do is you're trying to squeeze as much out of this little box as you possibly can. And you also are trying to get it to run 24 hours a day, 365 days a year. So you're basically stretching the limits of this computer as much as you possibly can. And inevitably what ends up happening in that process is the computer just has a lot of problems. And so because of that, you need, a skilled team of technicians who can basically go and watch over your stuff. And somehow in this magical world of mining, a company like mine is supposed to step in and say, okay, not only are we going to get you low-cost power, but we're also going to get you really low-cost management services, because it's a constant battle of my company and our clients of saying, we have such slim margins because we need to support the fact that miners need to stay profitable. So it's a very unique balance to get a data center company to work in this space. And if you get it right, for my fellow data center owners out there, it's great. It's a volume play and your business can perform really well at scale. But if you're not drawing in volume to business, it just doesn't make sense. So it goes back to the importance of having, basically a strong growth team within your company. That being said, really the way that we fit in for many clients is we take the weight off their shoulders that they wouldn't be able to manage on their own. So getting back to that power internet management thing, a lot of people tend to ask me I get what you do, but why wouldn't I just do that at my house? Well, the reality is that your residential electricity rate probably would never support a mining operation. So you have to go to people like us. And what we do is we basically scour around North America trying to find cheap power. And if you're wondering where cheap power comes from, there's actually a lot of it in the U.S. right now. You can find it, for example, if you go down to a place where they drill oil, A byproduct of oil drilling is natural gas that's released from the earth. And typically what we have to do with natural gas is we actually have to burn it. So we have to burn it off into the atmosphere because if we just release it to the atmosphere, it is a highly flammable, highly toxic substance that we can't just put out in the world. And so the government says you got to flare it off, which is, so if you ever take a flight over Texas or North Dakota, you may actually see some of these big flares coming out of the ground. And that's natural gas getting burned. It's still not great for the environment, but it's better than just kicking natural gas on its own out there. But the reason I even bring up natural gas is because these are examples of places where cheap power comes from. You can put a generator down on an oil field, and you can just turn that natural gas into electricity at a very low cost. Other places that we tend to go, like we go to a lot of distressed data centers, we go to a lot of former industrial plants, so like a paper plant or a power plant that's no longer functional, and we'll go draw they consume tons of power, but as you know, a lot of manufacturing has left the U.S. And so because of that, there's a lot of these stranded sites that are basically scattered around the country looking for someone to come in and consume power. And it's actually pretty fascinating what these companies do. I mean, we've had the opportunity to work in tiny towns of 500 to 1,000 people who have one paper plant in their town that supplied employment for everyone. And then that paper plant left because they went and moved to Mexico or to China or something like that. And the reality is that paper plants consume a ton of power. And that's where Bitcoin miners step in because we consume a ton of power too. I mean, we consume enough power to power up like an entire city, for example. And so ultimately the end, kind of my conclusion of this whole rant here is that, data center and co-location hosting is really crucial for mining, but it's been interesting to kind of see how companies like mine have figured out how they can stay alive and keep their clients profitable. And the way you do that is you go to very odd locations across North America to find very cheap power. And believe me when I say it exists in the strangest corners of the country, but it exists for a reason, and mainly because our country is built off the back of industry.
Yeah, well said. And I can definitely attest to that. That's one of the things that we're also doing. We're always looking for cheap power. And it's one of those things that when someone's getting into mining, that it really does, until they truly know what they're doing, it makes sense for them to go and learn more about the business and become a subject expert before they go and try and run every single area of an operation.
That's a great point.
Yeah, because I mean, just negotiating those power rates alone is a whole animal in and of itself.
Yeah. And again, that's really what we try to do with Frontier is like, we totally get it. It is a hard industry to get into. Even as someone who's just a retail miner who, goes online on eBay, buys 20 miners, like, well, what do I do now? Realistically, people are not going and going to go negotiate their own power deals because they don't know what they're doing. So that's the idea where Frontier steps in. We provide basically an all-inclusive, very simple billing structure and easy to understand model where all you basically do is you buy those miners, you ship them to us, and you pay us a monthly flat fee. And you go online, you figure out how much your miner is going to likely profit per month after paying us the fee, and you make a decision of whether we're the right fit for you. But the idea is we want to simplify what you just described, Will, because you're right. The behind the scenes is a bizarre, crazy, very, very complex world.
Yeah, definitely. So moving on, I guess, past the mining and to what all the mining is tied to, which is in many cases the price of Bitcoin. I'd be interested to hear your outlook on the future and how it's going to progress between now and the next halving.
It's a super funny question to ask, Will. I remember I reference back to this on a lot of podcasts when people ask me this question of like, what does the future of Bitcoin look like? And I remember there was a podcast I was on probably 2 years ago, or maybe it was about a year and a half, 2 years ago. And the guy asked me like, okay, so blockchain is this big thing now. Bitcoin was at 20,000 at one point. There's international adoption, et cetera, et cetera. Like, what's the future? And I'm like, I don't know. And I think there's not enough people in our space saying, I don't know, because it is a 100% fully speculative market at this point. As people might know who invest in Bitcoin, there's no rhyme or reason for why it goes up and down a lot of the time. I can give you a million data points that say, well, this is why Bitcoin just jumped from 9,500 to 11,000. But realistically, a lot of this industry is just driven off of sentiment. A lot of it is just emotions. A lot of it is just people saying like, I don't really trust my company's currency. I'm going to go put some money into Bitcoin. Oh, wow, Bitcoin's up like 15%. I'm going to go put more money into Bitcoin. And now it's at 30%. And before you know it, you have this crazy artificial inflation. And then the market crashes super hard a week later. People are like, wait, what happened? I'm like, Well, because the market was artificially inflated. So I think, Will, to answer your question more specifically, we have a long road with this industry in terms of having real world actual applications. I think we're just now starting to see where cryptocurrencies can be impactful in the world. I think with the economic pressures that were put on the global economic, the economic pressures put on the entire globe, the entire global community experienced this, particularly due to the pandemic, we're starting to see like why Bitcoin matters. Because when you have national currencies collapsing like Brazil, Greece, etc., it makes you understand why a globalized, decentralized currency makes a heck of a lot of sense in a globalized world. I mean, we already are in this globalized space. We already are in a predominantly a decentralized space too. I mean, right now, we're doing something that used to be centralized specific only to radio stations. And now you and I we have decentralized radio and we can shoot this podcast right here. So it doesn't make sense that money wouldn't eventually do that too. And that is where I ultimately see the first wave of impact coming with cryptocurrency is that we need a decentralized economic system, 100%, to just keep up with the times ultimately. And because of the fact that, candidly speaking, like most countries' currencies are artificial. They're not real. I mean, the US dollar, the gold standard doesn't exist anymore. So like the US dollar is just kind of a made up concept at this point. I'm sure that we will shift to digital money, even if it's not cryptocurrency I would go as far as say within the next decade. France is already starting to have that conversation about shifting to digital money. So this is a long-winded way of saying, Will, that what I ultimately see happening is that there will be a slow adoption of countries moving to digital money. So basically getting rid of like actual physical currency. Then during that time, there'll be a slow adoption of cryptocurrencies by governments, particularly governments who have collapsing national currencies. And like I said, we're already starting to see that right now. So that's what I see happening on like a governmental level. On a personal level, though, I think it's going to be a great asset class. I think it's going to be an awesome asset class to put money into because it's proven that it doesn't really, it takes a lot to take down Bitcoin. I'll put it that way. We've now seen it go through everything. We've seen it go through insane market swings. We've seen it go through a pandemic. We're seeing it kind of go through a recession right now. And it's proving that it's still here to stay. So I do think the future is positive for Bitcoin. I do think that we will continue to see governments warm up to it, institutional investors warm up to it. But in terms of the actual application of it beyond a speculative asset, I think that is still yet to be determined at this point.
Got it. Yeah. I mean, it's really interesting to have this conversation now in this COVID environment after seeing the Fed increase its balance sheet about 75% just within the past year, and how that's so different. You mentioned it's not tied to the gold standard anymore. And we look at a system like Bitcoin where it's technically tied to the miners and exactly what we're doing. So if that thesis of yours ends up playing out to some degree, maybe few of the details are a little bit different than how you outlined it. No matter what, it's still showing that the future of crypto is so much bigger than where it is today.
Yeah, 100%. I mean, a number that I never seem to have on hand is the number of people in the world that actually have bought cryptocurrency or used cryptocurrency before. I recently heard, though, I think it was one of my friends mentioning to me, it was about 75 million people in the U.S. out of a country of about 330 million. So, that's a significant adoption rate, about 30, 40% or something like that. So I do think like I said, from a speculative asset class, like it's a heck of an investment. And I do think people will play with it for a while. As a transactional tool, I think in time people will start to shift over to it, but we're going to need to have some sort of, like I said, we need to have either a collapse of national currencies or we need to have a government that comes behind it and says like we are pro crypto or pro digital money at a minimum for crypto to start to be adopted on a transactional basis. Because again, guys like you and I will, of course, you and I are like super bullish on crypto. I'm sure you've bought things with cryptocurrency before, but then I look one generation up at my mom and my dad, and like they're not buying things with cryptocurrency. So it'll likely, my guess is that it will slowly be adopted by society when, again, governments come behind it, digital money becomes more prevalent, and then candidly speaking, as the older generations start to frankly die off. I mean, I love you, Mom, but when baby boomers and generation and the generations that preceded them ultimately are no longer here anymore, and we have, young progressive policymakers and whatnot, then I do think that cryptocurrency, or at least digital money in some form, will be, kind of the new standard in society.
Yeah. And in terms of using it on an everyday transactional level, have you been staying up to date with any of the projects that are working on building that mass adoption?
Yeah, I mean, more or less. So this is another question I get a lot too, and I do kind of keep an eye on like the transactional tokens that are available nowadays, and there's a lot out there for people to pay attention to. I mean, I think the ones that are probably the most interesting are just stable coins, these like USD backed coins, because they do serve as a transactional tool. But honestly, the tool that nobody seems to ever bring up, and I personally think it's the most powerful for transacting cryptocurrency as a business, at least, and frankly, person to person as well too, person to person as well, is a tool called BitPay. I'm not sponsored by BitPay or anything. Coinbase Commerce is a similar platform, but the way BitPay works is great. And like someone asked me a little while ago, like, why does every business not accept crypto? And I couldn't give them a good answer. There's literally no reason for it when you have tools like BitPay. And for those of you in your audience that don't understand what BitPay is, it's basically like an invoicing tool, like a QuickBooks, for example, or a Stripe or something like that. But the difference is that you can bill your customers in crypto and you can receive the equivalent amount in USD. So if you need to bill a customer for $1,000 and the customer's like, I want to pay you in crypto, and you're like, I don't believe in Bitcoin. Well, not only are you completely cutting out a huge portion of your potential customer base, but secondarily, you're not recognizing that there are tools out there now that will do all the hard work for you. So I think from a transactional standpoint, that makes a heck of a lot of sense to me. Having tools that can basically automatically convert your cryptocurrency back into a currency that you trust makes a ton of sense for businesses. And again, if we're increasing a place where we're looking at globalized commerce and international currencies collapsing, like as a business, I don't want to accept, like whatever, for example, like Greece's currency is. I'd much rather have my Greece customer pay me in Bitcoin, and then even if I don't trust Bitcoin, I'd rather have them pay me in that and me receive USD versus having to play with, depreciating national currencies.
Yeah, definitely. BitPay, they actually have a card if someone wants to get involved with paying for things in crypto. BitPay has a card that allows them to do so. And they've had it for just over a year, I believe.
Yeah.
It's really interesting.
So, I mean, there you go, right? Like that's where I see transactions happening. I don't know if we're going to have some special coin that does it, but I could see people getting clever with how they use Bitcoin. And like you said, the BitPay card is a perfect example of that.
I'd like to thank BlockFi for sponsoring today's episode. BlockFi provides wealth management products for crypto investors. I personally hold my crypto with BlockFi because they pay me up to 6.2% interest annually on all of my crypto holdings. At Sazmining, we've hooked up all of our listeners with a special sign-up bonus. All you have to do is go to blockfi.com/Sazmining and sign up. Again, visit blockfi.com/Sazmining for an exclusive bonus offer. It's a no-brainer to earn additional interest with BlockFi. Today's episode is also made possible by Cogent Law Group. Finding reliable legal representation in blockchain is one of the biggest challenges when building a business. You need to make sure that you work with a law firm that understands the legal frameworks that apply to the industry and has the ability to strategically help you grow your business. When researching law firms for Sazmining, I found that Cogent Law Group checked all of the boxes. Not only do their lawyers have expert-level experience, but they also understand the blockchain industry. Cogent Law Group gives you access to high-end lawyers without breaking the bank. What is your favorite book or movie?
Yeah, I mean, this is a great question, man. In terms of, well, here's the interesting thing is like, I'm definitely a believer in technology through and throughout, but like more so than anything, I'm a believer in the human psychology. And I believe that if we're really going to reshape society, we don't start with fancy technologies, but we start with understanding people ultimately, right? And so to understand people, I'm obsessed with understanding how people work and how their brains function. And there's a great book that really got me kind of inside the minds of how human psychology works. Granted, it's slanted towards negotiation and sales, but I think it gives you a lot more color than that. It's a book called Never Split the Difference by Chris Voss.
Great book.
Yeah, sounds like you read that one too. It's kind of a classic in the business world, and I don't want to come off like I'm strictly some business guy and I can't think bigger than that. But I think that ultimately I'm under the same impression as you, Will, that I ultimately want to create a society where people feel empowered to do what they want, and ultimately to chase their own passions. And I think that things like cryptocurrency and blockchain enable people to live in that extremely democratized fashion, right, where you can live an independent life because you have an independent financial system, for example. And there's a lot to come after that too. But I think to get there, we have to understand people, and we have to be able to really be able to communicate to people why they should be looking at life a little bit differently. And I think books like Never Split the Difference are really crucial to doing that. So that's where I live on that front. Movie front, I'll answer that one too, since you threw it at me. There's a lot, man, honestly. I mean, I'm obsessed with the idea of what is beyond planet Earth. So Interstellar has blown my mind to this day. There's also a great one I'm also very obsessed with what is on this Earth, because as you probably know, I think, over 50% of our oceans have yet to be discovered, or even, because we just don't have the ability to travel down there. And there's a great movie called Life of Pi, which is a cool story of basically how some guy discovers more of what this Earth has to offer. So I'm really interested, in kind of understanding not only is what is here, but what is out there. And, things like it gets away from blockchain, but ultimately I look at technology as being the tool for us to achieve whatever that greater thing is that we want.
Yeah. Well, since you brought that up, I kind of want to dig down this rabbit hole with you of space travel. And I'm sure that you know what's going on with SpaceX and how there are plans to try and go and colonize Mars. What are your thoughts on how that mission and that vision is going to progress over the next decade or so?
See, this is where the questions start to get much more interesting. Blockchain's great.
I'm willing to dive deep.
No, blockchain's great, man. But, you're right. Like the ultimate goals here are how do we survive as a species long term? Mm-hmm. I do think that blockchain will have applications to allow us to do that, bringing it back to where we started this whole thing. But in terms of what the future looks like and what's beyond planet Earth, look, I do not try to be a pessimist in life. I really do try to be optimistic, but I also try to be somewhat of a realistic optimist, so to speak. My realistic optimism tells me that we're probably going to kill Earth. I don't like to describe it like that, but there's enough information out there to show that we are basically sucking the life out of this planet. Now, whether that happens tomorrow, whether that happens in a century from now, whether that happens in 500 years from now, the bottom line is we will eventually utilize the resources too much. We will eventually overextend our planet. And at that time, we're going to see more significant damages to the planet. And I think we already started to taste them just over the course of the last year. We saw massive fires in Australia that we had never seen before. We're also seeing things like insane global conflict. And even in my hometown of Los Angeles, we're seeing massive race wars. So the reason that I bring up all of these various layers is to kind of emphasize the fact that we are destroying the planet one way or another. We're destroying the environment. We're destroying our relationships with people. And above all, we're living in a society that does not feel empowered to do what they want to do. And you can't create a successful world unless individuals feel empowered to chase their dreams and passions, because that is ultimately what creates change in society. So that's my high level. On the real nitty gritty of what it means, of what this all means, it ultimately means that we're going to have to leave the planet at some point. So Elon's idea of going and colonizing Mars makes a ton of sense, in my opinion. I think that it will be extremely logical within our lifetime to see people living on Mars. Elon's already making such dramatic strides towards doing that. Of course, there's Blue Origin and whatnot with Bezos behind it. So I think you'll continue to see billions of dollars poured into the idea of dominating space one way or another, whether that means, going and taking over Mars, or the U.S. starting a space force. The bottom line is we're going to dominate space, and humans have already gotten a lot of their junk up there anyway. I think there's thousands of satellites that exist up in the up beyond the atmosphere right now. So, we've already started to make our footprint up there. I think we're going to continue to.
I would like to dive down this rabbit hole, and I think that you brought up human versus machine surgeries, and so I'm not sure if you've been staying up to date with Neuralink and the work that they're doing there. Another one of Elon's companies.
Right.
What they're trying to do is they're trying to implant this chip, and the surgery is so difficult that a human can't attempt it. So what they're doing is they're threading I'm not even sure what to call it, but threading threading within the blood vessels within the brain.
Yeah.
And the needle is so small that it is the 1/7 the diameter of a hair. And so these types of surgeries can only be done by machines, and it only makes sense that the best surgeons in the future are going to be machine driven.
100%. 100%. When you talk about things like Neuralink, that will be an inevitable reality without a shadow of a doubt. It actually, in many ways, it sort of is already a reality. I like to tell people that we don't understand, but we're already cyborgs, and the world has actually prepared us to be that.
Yes.
The minute that smartphones became a thing, we became cyborgs in a way, because effectively they're already attached to us. I mean, we feel like we have volitional control and we can distance ourselves, but realistically, like, who is ever without their phone? It is always within reach, and frankly, you'd be a far less powerful human without that phone always on you. It's your communication tool, it's your knowledge base. I mean, it serves in so many aspects, and so I feel like we are already being nurtured as a society to live in that sort of more cyborg style of culture. And so when Apple comes out and says, "Hey, great news, we've got these really cool glasses that you can wear," and Apple will do a better job than Google did, but like, we've got these really cool glasses you can wear. They're stylish, and now you can have an AR display of the world. We're gonna be like, "Yeah, that sounds pretty good." And then they're like, "Well, even better. A couple of years later, we have contacts you can wear." Like, "Yeah, that sounds even better. Like, I get my phone in my eye. That's great." And then they're like, a couple of years later, they're like, "We have an even better idea. We'll just take your eyeball out and put a cyborg eyeball in there, and now you'll have optical zoom, and you'll be able to see through walls and all this stuff." And we'll be like, "Yeah." So the way I look at it is that, like, major technological companies are just nurturing us to get to that point. Ultimately, it's a very effective capitalistic strategy to slowly release technological innovation. So you start with something that's as simple as an iPod. You eventually level up to a phone. That phone will level up to an Apple Watch. That Apple Watch is now you're comfortable with wearables. So that levels up to glasses. Those glasses level up, so forth and so forth, to the point where you're like, "Yeah, I'll just get a chip installed in me." It sounds crazy today, but if you just look at how the diffusion of innovation works, it's so logical that we will eventually be, half man, half bot.
Yeah, that's very interesting, and I do completely agree that if you're going to try and get someone to accept that end product of, in that case, the extreme, we'll take out the eyeball and put in this non-human version. You can't just bring that up right away. You got to build to that. And that's something that we see a lot of time without diving down a whole nother rabbit hole with governments and privacy type issues. But in this particular case, do you think that this is part of the strategy that's currently being pursued by some of these tech giants, or is it something that's happening organically because of just the rate of innovation? So that's happening where they're making these slight improvements over time, and then it gets to that point, or do you think that they're almost slowing down innovation on some of these fronts to make it accepted over the long run? And it's a very speculative question, but I'd be interested to hear your perspective.
I think it's the writing is 100% on the wall that they are intentionally slowing down the release of innovation.
Really?
That's
interesting.
Well, and here's my theory on it, right? I mean, number one, as two business owners, what would make more sense? Let's just say, Will, that you and I both have the most innovative product in the world. Like, you and I happen to we have it. I don't know what it is, but like, you and I just happen to have the most innovative product to ever exist of all time. And we both know that everyone will buy it if we put it out instantly. But here's our problem, Will. We don't know what the next iteration is. So we have a final product, right? Only. We don't know what comes after that. But we start looking at our product and we're like, well, the interesting thing is this thing is such a good product that what if we just release like one feature? Like, what if we just released 5% of the product and we made hundreds of millions of dollars doing that? I would guess, Will, if you and I were at a whiteboard in a room, we'd be like, "Yeah, it sounds like a good idea." And then we will seem like a really innovative company because next time we'll release 5% more of the product in 3 years down the line, and then 5% more and 5% more. And by the end of it, we have become an absolute multi-billionaire, multi-trillionaire behemoth in our industry, all because we had a really cool product idea. Here's an example of this that I've always found interesting. Siri, which we know is our little AI buddy on our iPhones, began recording in the early 1990s. We didn't see that on our phone until early 2010s or something like that. So it goes to show that like Apple knew exactly what they were doing. And then you go even further down the line to something like the military, where I am fully convinced the greatest innovation is occurring in the military. And the reason why is because we pour billions of dollars into it every year. I mean, more money than any tech company could ever raise goes into the military. And then you think about things like, like Area 51, for example, which I'm not here to speculate that Area 51 has a bunch of aliens in it, but I am here to speculate that Area 51 has a ton of ultra crazy innovative technology in it that we will not see for several hundred, or maybe not several hundred, but several tens of years, because they don't have to. They're going to keep building and innovating on it so that we have it. And one day they may use it for purposes that may freak us out. But the bottom line is that, like, as a species, we're not ready for what smart people have to offer just yet. And it takes time, like a very interesting theory that I studied when I was in college was called the diffusion of innovation theory. And the concept behind it is basically like, how do you appropriately diffuse new concepts to the public without scaring the living daylights out of them? And you do it by doing a very slow roll. So like, yeah, you know what, Will? Like, I could go from having a landline in my house to having a little phone in my pocket. Like, that's a logical jump, but you can't imagine like people going from a landline to having like an Apple Watch. Like it would, people wouldn't buy it. They'd be like, oh, that's just like, that's too much. Like I don't get it. I don't understand how that works. So Apple then says instead, okay, well, let's shove a ton of products in between. Number one, so that we can make a ton of money because we're capitalists after all. And number two, because we don't want to scare people away from us. We want to incentivize people towards us.
Very interesting. Going back to that whiteboard example, right? You have the most innovative product in the world, and I do agree that logically it would make the most sense to release little by little rather than just coming out with that final product. If the major companies today, let's say, had innovations that were much further down along the line, do you think that they're at a point where, because there are more than one company working on it, right? So let's say Apple has this innovative product, and then all of a sudden they're worrying about potentially Google trying to do the exact same thing and release that next iteration. So do you think that it would still be possible for a company like Apple to have that far down innovation and still be holding it back until a competitor puts something out? Or what do you think the dynamics are at play on the competition side of where innovation is and what the public's seeing versus what's behind closed doors at these companies?
That's a great point, man. I mean, look, it's a great question as well. Here's the deal. Like a company like Apple, they don't care. They don't care what the competitors do. I mean, if you look at Android's an open source platform that was miles beyond Apple software like years ago. I mean, they had I can't specifically speak to them because I can't think off the top of my head, but more advanced cameras, more advanced AI, better layouts, the whole thing, more customization on the phone, everything. Android was way ahead of Apple. But going back to human psychology, Apple doesn't care because they know people like their products more, and they know they make simpler, more easy to understand products. Why do they do that? They do it intentionally. The Apple iPhone is a super regimented phone in terms of the way it's structured. Like you follow a very specific formula when you get one of those phones. Like everybody's home screen like basically looks the same. Right? It's like a grid layout of a bunch of different apps. You go to an Android phone, it can be whatever you want. And so I think that really smart companies don't just want to innovate. Like that's not their number one goal. Their number one goal is that they want consumers to adopt and enjoy their product. And you have to be able to play into human psychology to be able to do that. Apple did a great job with that. They didn't scare you. They didn't overwhelm you. They said, we're going to simplify this crazy new technology. And we're just going to give you a prepackaged phone with basically a prefabricated home screen. And here's your big message button and your big phone button. And it works just like your last phone, unlike Android that came out and said, oh, well, great news. Like you can have 10 different backgrounds and you can have a screensaver and you can organize your apps this way and you can have your phone wake you up and read you the weather in the morning. Apple didn't do that for years. And a perfect example of this that just drove all of my tech buddies like absolutely insane is if you look at the new iOS that's coming out, which is Apple's iPhone's operating system. I can't remember. I think it's like iOS 13 or 14 or something like that. Its home screen looks identical to an Android from like 4 years ago. They took a bunch. I mean, and it's like, dude, here's the best part, man. This is like where I always where I always find it particularly funny. If I'm Apple, I look at an Android and I say, you guys go do the market testing. Like, you guys go fail. Like, you guys go play with all of your different features and whatnot. Try your different layouts on your home screen. Like, you guys see what works. 5 years later, we're gonna watch how your consumers responded to that. We're gonna pick the best possible version of what you did, and we're gonna have that templated on our phones, on our iPhones, and then we're gonna deliver that to all of our consumers, and they're gonna be like, oh, well, this is really novel and new because it's different from the last Apple iPhone, layout, but to Apple, they're like, oh, we were way ahead of this, and we'd have to pay a dime for market research.
Yeah. Wow. Well, I'm really glad that we went down this rabbit hole. I got one last question for you, but
sure, man.
Before we ask that question, can you just tell everyone who's listening where they can connect with you online?
Yeah, this is another rabbit. So I'm sure, Will, you and I could sit down and have, hours of conversation, man. But I'm actually not, for very specific reasons, I'm not big on social media. So it's a little bit tricky to track me down, like things like Facebook, Instagram, Twitter, things like that. But you can definitely find me on LinkedIn. So easy, just type my name, just Kyle Herron, Frontier Mining. I'll pop right up. Feel free to add me on there. I'm very liberal in terms of the people that I accept and kind of converse with, because you just never know what great mind is out there. And then secondarily, please go head over to frontiermining.co. That's an easy way to get in touch with me, obviously. Kind of the frontward-facing image of the company in many ways. You can find me in our chat bubble, bottom right corner of the website. But we're big believers that all this stuff we talked about, Will, all this stuff that we talked about in terms of how we want to reshape the world, how we want to travel, become interplanetary species, et cetera, all of it's achieved through the means of technology. And I strongly try to impress upon people the importance of at least understanding one of them, whether it's blockchain, AI, automation, space travel, autonomous vehicles, et cetera. Just try to get one. And over at Frontier, we can certainly help your audience understand at least the blockchain side of it.
Great. So the last question, it stems initially from the quote, I believe it's from Bill Gates, who said that many times people overestimate what can be done in a year, but they underestimate what can be done in 10. So let's say that we move forward 10 years and we're looking at the cryptocurrency mining industry. What do you think it's going to be like?
That is a tough question to answer, man. Cryptocurrency mining specifically in 10 years may very well not exist in its current form, I'll say. Because eventually, it won't happen the next 10 years, but eventually profits are going to get so thin with the increase in hash power and the increase in institutional involvement that it will be an industry that unfortunately probably gets very centralized. It'll probably be a significant amount of large institutional players with an enormous amount of money squeezing out the little guy, and data centers like ours centralizing a lot of the hash power underneath our roof. So I think the goal of Bitcoin becoming a decentralized system will get challenging, without a question. But I do not think this is a bad thing for Bitcoin, because moving away from having government-backed digital or the government-backed currencies is a gosh darn good step for the decentralization of basically money as a whole. But to answer your question on an even bigger level, Will, I don't look at mining as being the end-all be-all for the understanding of how computational power plays a role in the world. I think mining is an important it's an important proof of concept to understand that computational power in the future has value to it, right? As we create further decentralized systems, people will trade computational power for money, right? So right now it's sort of you could call it a trade, right? The blockchain, if we're personifying blockchain, says to a miner, hey, I got a deal for you. I will give you money if you give me your computational power. I think that concept will continue to grow. I really strongly believe that computational power will be one of the greatest currencies of the future. I think the people that control computational power will become the behemoth companies, because the demand for data is only growing. The demand for cloud gaming, cloud computing, film rendering, AI processing, automation, et cetera, is only growing. And all of that rests on the backs of really, really, really powerful computers. So if you're looking for a new sector to invest in, any sector that has to do with computational power will be an interesting one. If you're thinking about what will be of extreme value in the next decade, it will be computational power as a whole, for blockchain, for AI, and for all these future technologies we've discussed.
Kyle, thanks again. This was a lot of fun.
This was great, man. Thank you so much, Will. Thank you to your team. You run a great show over here, man. I'm wishing you guys the best.
Thanks. You too. We appreciate having you. Thank you for listening to this episode of the Sazmining podcast. Be sure to follow us on social media and YouTube for the latest updates and previews of upcoming episodes. Full episodes and transcripts can be found on sazmining.com every Thursday. If you want to hear us interview a particular guest on a future episode, please reach out to us at podcast@sazmining.com.